Hello everyone, this is Tomo for the Market Zone. Thank you very much for joining me for this video, weekly markets analysis video, weekly markets review, where I'm going to show you guys several technical developments occurred over the last few weeks, mainly on S&P that finally reached the final target level for my bullish setup that I was mentioning again and again on my weekly markets analysis newsletters from the bottom of January through the double bottom on February and till the end of this current bullish setup when S&P reached 2000, which is a major daily structure, and also just above it the 200 days moving average will be tested over the next few weeks, with ECB coming next Thursday and later on the following week FOMC. So very interesting developments, and we are heading for another interesting 2 weeks. So I will cover some of this in this video. If you've been following the Market Zone blog, marketzone.tumblr.com, you've stayed updated with all the recent development, and you should have made money from this trade, and also trades on Euro USD, gold, and of course several stocks and Forex pairs that I've been covering over the last month or so. If you want to be part of the Zone community, you can subscribe to the weekly markets analysis newsletter by going to www.themarketzone.net, subscribing there under services to the weekly markets analysis free newsletter, weekly newsletter covering stocks and the Forex market. And if you want to take your trading to the next level, just join the Elite Zone, also under services in www.themarketzone.net, and you'll be part of our elite community. Let's go over some charts and we'll see what happened and what might happen over the next couple of weeks. So first of all, what we see here, S&P, SPX 500, and as I mentioned, it reached 2000, closed just below it. We have the 200 days SMA coming just above it near 2020, and also a structure zone I mentioned in the weekly markets analysis near 2050, which will be a completion of a bullish pattern, a bullish bet right here, right near 2050. So if S&P will continue higher above the 200 days SMA, maybe to spike above it, it will complete a bearish bet pattern, and these levels 2020 and 2050 are two interesting resistance zones to monitor if S&P will overcome the 2000 level, perhaps with the help of the ECB or FOMC. So technically you have three levels to watch: 2000, 2020 and 2050, three major resistance zones that will try to deny S&P from reaching new record high. This is the situation with S&P. No bullish trades right now, only waiting to find some bearish opportunity, to find perhaps a continuation move to the downside. If we'll check the trend line here, you can see that we have small trend line, daily trend line, just where the completion of the bat pattern is near 2050. So very interesting scenario if S&P will reach here, but it will mean that at least temporary it will be above the 200 SMA line. So a little bit more extra cautious is required for such bearish scenario from here, from 2050. That's the situation S&P. Now let's look at gold. What's happened with gold? In gold, what we see is the bearish cipher I mentioned also in the weekly markets analysis lately. It started, the rally on gold started from the bottom of the weekly ABCD pattern here near 100 level, and it rallied strongly all the way up, to the completion of the bearish cipher, created a pin bar, small pullback, and as I mentioned to the lead zone members, I was expecting some kind of stop loss grabbing above here. In gold, I was looking at the $12.80 level in XLE USD, and in GLD we see here another pin bar just below the stop loss here. Now it will be interesting to see how gold will react to the next 2 weeks with the central bank's intervention, maybe more QE, especially FOMC, and how they will deal with the strength of the dollar. So gold, potential bearish scenario, bearish cipher, double top, a little false break, and 2 pin bars. I expect some continuation now to the downside. The first daily target is this level, a little bit above 110, about 113. That's a level I intend to take profits, and a longer term bias remains bullish on gold and metals, so I would like to find some buying zones, some long-term bullish opportunity that will allow me to rejoin the uptrend in gold that started here on December 2015. That's the situation in gold. Euro USD now. Regarding Euro USD, what we see here is what I expected, and I covered it in the weekly market analysis this week. I was expecting it to retest the 618 Fibonacci near 1.085. It's a structure at the bottom of this bull flag. It was, you see, the rally, bull flag continuation, completion of bearish bet, retracement, 618 retracement, and then boom, a rally. Now retesting the 200 SMA line just above the uptrend line here, below the 200 days SMA, below the fast SMA. So we are kind of in no man's land now. Bearish traders can try to short Euro USD as long as it stays below the 200 days SMA. Bullish traders can try to buy Euro USD above this trend line with stop loss below the recent lows, below 1.085, but I suggest to wait to hear what Draghi has to say next Thursday, and then take trading decisions according to these levels I just mentioned. 1.1 is a key, is an interesting key zone, and support 1.85, resistance 1.1, with stop loss above 1.11 for those who want to short Euro USD. So right now, nothing to do with Euro USD. We took a little short today on Euro USD. A lead zone members got an email from me talking about Euro USD. We took some pips over with this trade, but nothing for the longer term right now. We are waiting to see what the next ECB meeting will have to offer in terms of QE, and will it disappoint investors or ignite another rally in the markets. Moving to some stocks trades, Apple, we had a bullish setup here. Apple was consolidating for about almost a month, and inside the stop loss zone we had this is a setup I also posted in weekly markets analysis over the last month or so. It was consolidating the price inside this stop loss zone, and boom, when it broke above this weekly structure, it rallied all the way up, now making a nice progress towards final target level of this setup. Actually, the final target level will be right here when it will reach 200 days SMA, but I intend to take profit much sooner than that, just below 110. So Apple, nice progress, big winner for the lead zone members who took this trade. We had other trades also bullish in elite zone that reached very nice gains over the last 2 weeks due to my bullish bias for the markets. We focused on bullish trades that generated very nice profits. Another very interesting setup we had in the weekly market analysis last week, and also a successful trade for the Elite Zone members, is the bullish trade on Aussie USD. From this butterfly, we took long bullish opportunities every time that the price offered us, and the last opportunity was when it reached 0.71, completion of small bullish Gartley pattern that the 50 days moving average and the structure here generated the rally. The first target zone was the 200 days SMA, and now it reached the top of a weekly trading range. You see the trading range between 0.74 and 0.68. It reached the top of the weekly trading range and the completion of AB equals CD pattern. Very interesting trading scenario. Despite the strength of Aussie, you need to be cautious here, but that's bearish harmonic with the weekly structure, so perhaps it will lead to a small pullback towards 0.72, maybe 0.73, to retest. Now that turns to support, and then maybe continuation and a breakout above 0.74 towards next weekly structure near 0.76. So that's the situation with Aussie USD. Interesting trading scenario for next week. Be careful with this one because we see all the strengths. The Aussie is strong and the US dollar was weaker this week, so that's the reaction we see in Aussie USD. Bearish AB equals CD pattern and a weekly structure. The last chart I want to show you guys in this video is XLE. It's also a setup I published in the weekly market analysis over the last month, and we actually took some trades on XLE in the lead zone. It was a trade recommendation, trading scenario I published to the members also over the last months, as I was bullish on oil and stocks. And XLE reached the final target level of the bullish setup, the AB, the aggressive C entry here, with the completion of the AB equals CD pattern, as you can see right near the $60 level, just below the daily downtrend line here. So ABCD pattern completion, we just completed this pattern, and we have a resistance just above near $62 with the daily downtrend line. Very interesting bearish scenario on energy sector, and it will be interesting to see how it will affect oil. We also have a bearish pattern in WTI in oil. I've sent it to the members during this trading week. The trade is already in the PRZ, and XLE is actually showing the same thing, bearish AB equals CD completion. The trigger should be where if oil will decline below $60, that can lead to a short pullback in oil. I remain bullish oil and energy, but a little pullback is definitely something that you can trade. So pay attention to the completion of the ABCD pattern here. And that actually completes the video I wanted to share with you guys today, with the trading scenario that I think that will be very interesting to monitor over the next 2 weeks with the ECB and FOMC that are coming. If you like this video, please share it, subscribe to the channel, and of course don't forget to follow the Market Zone blog, marketzone.tumblr.com. Subscribe to the newsletter. It will provide you a real trading edge every week. And if you really want to make a progress in becoming a successful trader, I highly suggest you go to the Market Zone, go to the services, and subscribe to the Elite Zone. It's just for $39 a month, and you will get detailed trading scenario each day, each week, 4 stocks on Forex. You can choose the plan that you want to subscribe to. You owe it to yourself to try the elite zone. So go visit themarketzone.net and subscribe to the elite zone. Thank you very much for joining me for this video, and I will see you again in the next video. Bye.